Now, I think it's fair to say that if you've been invested in China over the past few years, in the past month, you've probably had some very mixed emotions indeed. Here to talk me through the implications for China funds specifically is Lena Simbaluk from the manager research team here at Morningstar. Lena, thanks so much for joining me. What's actually been happening in China to precipitate some of the drama that we've seen in the last month?
Yes, so at the end of September, the Chinese government has announced a few stimulus measures, including, the ones directed at real estate and consumer areas, and also like the stock market as well. So as a result, the Chinese market has rallied, especially large cap names such as Alibaba, Tencent, Meituan, JD.com. They were the clear winners there. And generally, the Chinese market from the bottom market just a few months ago has become one of the top performing markets year to date.
Yeah, brilliant. And how are active managers actually positioned in China at the moment? Have they made any changes off the back of what's been going on?
Yes, so interestingly, in the positive camp, there are value emerging markets managers like Lazard and Bzina. So those are the funds that they would be bullish on China. And actually, this is a minority because it has been common that emerging markets managers, they would be underweight China just because of all the issues that have been ongoing. But the value managers, they would be attracted to valuations which became quite depressed, and companies are trading at really attractive valuations. So, they would be the ones, being liking those opportunities.
Yeah, let's get into the depths of that about the managers themselves. I know that there are emerging markets managers that will very happily talk up China, but it's very interesting to see that on this occasion there seem to be managers with exposure to China that perhaps aren't even that confident given the stimulus and the aftermath. That would be fair, wouldn't it?
Absolutely, yes. So in the more cautious camp, and those are the majority, for example, there is a GQG Emerging Markets Fund, and the manager, Rajiv Jain, so he's quite skeptical about the rally, which he believes will be short term. And this is mainly because, he believes more measures are needed for the long-term recovery. Yeah. And he thinks that he compares this rally with the reopening trade of 2022, when which was quite short, and there have been a few false dawns, to be honest, and that's why investors, they expect a bit more from the government. In this case, GQG, they are not going to change their positioning, even though it has costed them, actually, to be honest, year to date. Another manager is Polar Capital Emerging Market Stars. So the manager there also believes that structurally and fundamentally nothing has changed. And also, he believes it will be just a short rally. That said, he has been adding to some growth areas, which he believes, will continue to do well, like consumer, software, digitization, and healthcare companies. Some other managers, like, for example, Fidelity Emerging Markets, so the manager there, they were more than 10% underweight China, which is quite a lot. And although I think they've reversed that call more recently, they've been adding a sort of cautiously opportunistic on the market. And finally, there are managers who are style agnostic. So, for example, they would be changing their portfolio depending on their macro views, and which might change. So, some of those is BlackRock Emerging Markets. And recently, even though they were underweight before the rally, they've changed their exposure recently, and they've neutralized it, basically. Yeah. So, but generally, the general view that a lot of managers, they are quite positive about the stimulus, even though they might think that more is, they would like to see more, and especially they would like to see fiscal stimulus. But there is one big positive, which I think everybody can think of, is that the perception about the Chinese government has changed. And it means they became a bit much more stimulus-driven, and they do recognize that more measures are needed, and they are more pro-growth.
Okay, Lena, thank you so much. That's great. If you'd like to know more about investing in China and specifically China funds, you can check out Lena's latest article on morningstar.co.uk, in which she and colleague Madeline Black unpack all of this and provide a lot more detail on the fund specifics themselves. Until next time, however, we are out of time. I've been Ollie Smith for Morningstar.